How's it going, guys? Let some people jump in. Yeah, one jumped in already. Nice. What's up, guys? All right. During this live, I'm probably going to be cleaning up this chart because it's so compiled with so much noise that it's hard to, like, everything just lags. So I'm probably going to be resetting this chart, rebuilding it with you guys. What's up, Caliber? How you doing, man? Brett? What's up? All right. All right, so I'm going to right click on this chart. I'm going to remove all my drawings, start completely over. Dylan, how's it going? Noah, Dylan. All right, yeah, I'm going to clear up this chart. We're going to start completely brand new. We have an area where we're going to be preparing for longs. We're very, very close to it. So we're just a matter of waiting for the proper structure. HRJ, how you doing, man? Appreciate it. Ciao. Okay. So let's clear this chart up. Remove drawings. 789 drawings. Probably going to take TradingView a second to clue in. There we go. And there we go. So now I'm going to pull it up and change the chart a bit. So rather than charting on Bitstamp, I'm going to chart it on Bybit. Do we have against the USD pair, or is it just Tether? Just Tether. Bybit spot. Where's our perpetual futures? All right, perfect. Okay. All right. Get rid of some of our noise. Get rid of the indicator here. Yeah, just starting with a brand new chart because I found that basically I have so many compiled drawings that basically it's making, like, it's taking forever for things to render, for me to move around and stuff like that. And it's kind of affecting the lives. I did it. It's too late. So we're going to start from a brand new chart. I'll do a top-down analysis because now I've got no points of interest, no key areas of interest. So I got to start from the daily and work my way down. Okay. It's still sluggish, still slow. If I go to this chart, for example, I can just zip right through it really quickly. Let's see, USDT. It could be the indicators that I'm using. Let's go down to yeah, that's a lot faster. All right. Well, I'm going to pull up the indicators here. I'll get my 200 EMA on. I like to have that on my chart. I'll get 2 of these down, unless you're using an indicator that allows you to use a consolidation of both EMAs into one, like the double EMA, for example. So length set to 50. I like to have my 50 EMA red. It helps me identify a little bit with more like visual confluence that, like, when we cross the 200 or the upwards or downwards, like, it's easier for me to identify if it's a golden cross or death cross based on its color. So we got the 9 EMA here, green. I'm going to change this input so it's set to 200. I'm going to sync the time frame rather than to chart. I'm going to sync it to the day. Okay, and then the same thing with this one from time frame. I'm going to adjust this to the daily. Okay. I'm going to pull a fixed range from this valley area here to the moment we exit it. Get rid of my magnet tool for a second. Right, so this area of consolidation is going to help us identify that if we get acceptance back inside this valley area, that where we could lead to from there. So if we get a full rotation from the valley area high to the valley area low after acceptance into it again over here, then we can start targeting the valley area low while being mindful of our barriers along the way. So I'm going to mark those with a horizontal array like this. Previous valley high. I'm going to press Control, click, drag so I can clone it. Change this to my previous valley area low. Click, drag. Bring it to the previous point of control. There we go. So I got my previous range, macro range here from November all the way to, I believe, February, right? Yeah, February. So this is going to help us a lot for if we get that acceptance into here, it'll give us confidence of a continuation down to the previous valley area low while being mindful of the point of control. The point of control is flush with this barrier concern where this demand zone is, where we had this impulse move base, another impulse move. Whenever you have that kind of behavior, you got to treat this like a demand zone, just like this right here. You treat this like a demand zone as well. So when we come back down to it, we're more likely to get a bounce off of it. And we're actually coming down to revisit that area alongside with the 50 EMA. I'd like to mark that demand zone actually. I got to look into this, but I'm pretty darn sure this is a record of some sort. Having this many hourly consecutive candles to the downside on Bitcoin, I think that's some sort of record. I'll look into that later today. Okay, so this previous value area data is going to be helpful for our active price action that we got going on right now. So I'm going to mark this one a little bit differently. So rather than this previous, I'm going to put PM on it. So it's previous macro. So I can be able to identify the difference between it and a regular previous value area like this one. Okay, we got a previous value area low here. And then lastly, our point of control right here. All right. So you can see how this data, when we came back down to this valley area, how it could have helped you with confidence in knowing for potential, when to prepare for potential longs, right? So now, right now, what we're trying to wait to see what occur is a potential rejection off of this previous valley area high, or maybe even the point of control with a lower low, telling us that we're likely going to rotate down to the valley area low. And when we get to this valley area low, we're going to have the 50-day EMA and this liquidity here from back in on the 12th of June that we could sweep that liquidity and prepare for a potential retracement back up. So there's a high confluence area right here to prepare for longs. If I were to box the zone, it'd be from the bottom of this wick here because we don't always come down to the lower wick. We prefer it, but it doesn't always have to happen. So I'd box this whole entire area where I'd wait for an opposing change of character response. And if we get it, then we got ourselves a great long opportunity. Send this to back. There we go. So we'll see either a scoop of this liquidity here, opposing change of character, but hopefully a retracement to grab all this liquidity here before getting that return back up. If we instead come down lower and use this as resistance and then get acceptance into this valley area, we're likely going down to 97K, guys. I can't view Bitcoin's chart for some reason. Shows other side. Let me give you guys this link. Turn the sharing on. I'm gonna rename this. I have it set to lessons. This is one of the charts I use for like regular lessons and stuff. Let's rename it to our new Bitcoin chart. And here's the link, man. Pierre talking about a sell wall at 103,800. Between that and 104,800. Yeah, 104,800. I got you. Yeah. Yesterday we had a pretty wild sell wall stack. We were talking about this valley area here, from here to here, and we're trying to see if we can get that acceptance into this valley area. Sec here. Well, we had this supply concern right here that we were worried about. And if you guys remember, like the signal that we are talking about, it wasn't a true signal. I didn't say enter or give you a stop loss or anything like that. I actually kind of missed out on the trade setup. But we can see like last night we had stacking sell walls. Like the price action, like market makers did not want to get acceptance into that valley area. So a fairly heavily guarded area. There's a lot of liquidity stacked right here, like tons of liquidity stacked here. So it seemed like it was guarded. We had the supply concern here. We couldn't get acceptance in the valley area. And then we had a low time frame, like 5-minute SFP last night, right here, where we scooped up the liquidity from these highs with this wick and then closed back inside the range, inducing a potential sell at least to the low. But then we got the really strong momentum close right below there and got that change of character response and confluence with that. And that basically sparked the downtrend. But the absolute perfect top trade that was safe to take was this one right here, using the wick itself as your stop loss guard. So congrats to anyone who got that SFP, because that would have been an amazing short. I missed out. I was working on some stuff, and I also had the kids and stuff, so I kind of missed out on that trade. But we might get the reversal. We had a really steep drop off here, but we're coming down to an area of confluence. So, and we're really close to getting full acceptance into this valley area. We're getting rejection off the previous valley high. We're starting to get rejection off the POC. And like we get that lower low, we're coming right down to the valley area low. From here to here. And then from here, we have amazing time to prepare for longs. We were waiting for a potential long here. This is also an area of confluence to prepare for longs. When we return back to a valley area, the valley area sometimes will act as a form of support, but we never got that like true confirmation. Unfortunately, we failed to get a confirmation. Like right here was promising for a moment, but the sell pressure gave us an engulfing response, and that basically said, don't go in. But yeah, now we're at this valley area, so we're likely going to get that full rotation down to 102 area. So here we've got to prepare for the opposing change of character. We'll start to expect a high volume return back up. Pretty intense drop though, kind of free falling. What's up, Paul? Sorry if I say your name wrong. Nick, how you doing, man? John Foster Crypto. How you guys doing? But yeah, that's what we're preparing for. Just structural evidence of support through an opposing change of character. I'll be looking at the 5-minute structure, then rotating to the 15. I prefer to jump in on the 15-minute confirmation, but if we only can get it on the 5, we'll take it on the 5, and then watch our 15-minute barriers. And same thing with the hourly structure, though. The posture, at least we're getting a bounce now, because like our to wait for an hourly change of character occurrence, like it's way up here, like way up at 107.6, because that's the only proper pullback that we've got. Now we're starting to get that in about 40 minutes. If this candle closes green, then we have a proper healthy pullback. So if we get a lower low from there, we'll have an hourly change of character. So if we want to see basically like a low time frame chain reaction, starting from like the 3-minute to the 5, then to the 15, then to the hourly, at least we'll be able to get like that hourly change of character response like sooner rather than way later to help us hold our trade longer. But yeah. So yeah, just a bit of a waiting game for Bitcoin. Waiting for it to get down there. Thanks, man. Appreciate it. That's where I got an order block. Hopefully that doesn't pretend to only bounce for a crash on me. Yeah. So we basically just need to, if you have the hour blocks are great, like order blocks are great for the confluence. So think of it as like a zone of potential interest. And if it happens at a value area low, that's additional confluence with that zone where you can prepare for those potential residual orders inducing a reversal from the order block. And to find evidence of that potential residual orders, it's good to look at the order books and see if there's any limit orders down that area. So if I were to grab the order books and see if there's any buy walls down there, we can see that we've got a couple. So we have a buy wall at 103,210 for the amount of about 200 or 100 and about 170 Bitcoin ready to be bought right there. So 103,210. Let's go back to here. So we get a horizontal line, coordinates 103,210. And we'll put text saying like it's about 170 Bitcoin buy wall, which is, by the way, is not a very big buy wall, but that's like one wick kind of thing. So we can see that we have basically buyers waiting from this recent low that are likely trying to jump in on the liquidity grab, catch the knife kind of style. I'd rather wait rather than trying to catch the knife. I'd rather wait for a change of character current so we have evidence of the like buyers starting to take over, and we could get that full rotation at least to the local value high. But if we get that break of structure off the value high, then we can likely see that continuation up. And then we have to depend on market structure to find key areas of interest where we might find barriers along the way. Because we kind of like free fall along the way, we don't have very many crazy supply concerns. Like we have one like right here. We have a little one right here. We have this zone of interest here and right here, but nothing too dramatic. Looking at the 5-minute structure, it's our main boss to get out of this valley area is right here at this supply concern. So if we're jumping in on a change of character, like an opposing change of character here, to call the contrarian entry for the reversal, we'll have to watch this as our main boss in confluence with the value area high. If we get past it without an opposing change of character like this, we still get that break structure like I said before, then we should be set to be able to hold this trade for it to convert from a scalp trade into a potential swing trade for a move back up. Is this news driven because of the drop? So yeah, I'm sure news might have enhanced the volatility or driven retail to sell, but whether the news came out first or after, it doesn't really matter. The structure itself will help define a reversal. When you're at a key area of interest like this, like a previous value area, and you have an SFP, like that's your first bearish warning, then you get the change of character. That's like a stronger bearish warning. So the structure itself is going to help define the potential reversal, and news is usually a tool that market makers will actually tend to use. Some of it's obviously not like driven by market makers, but news will help bring up the volatility of something that's technically already confirmed on the charts. So you'll start to feel like you live in a simulation the more you trade, because like the markets will normally give you your bias prior to the news, especially with Bitcoin. With stocks, it's a little bit different. Like news is pretty important for some stocks to even get attention. Well, just like Bitcoin for its adoption, but yeah, man. We had some crazy wild bearish news at least recently with the war and all that stuff. And the funny part about that is the fact that like it was here at around, I think it was here 110 where we saw 10,000 Bitcoin being brought into the market on Kraken. And then we started to break down, likely from Kraken selling. Either it was here or it was here. One of these two moves. And then shortly afterwards, news on the war came out. And that we already confirmed a break to the downside. We already saw money getting flowed in from into the exchanges. So most of us were already in trades. But yeah, then the news came out and enhanced the volatility of the drop. And we're starting to fail to get higher highs, right? And we're getting lower lows, and we already had the daily bearish change of character response here, right? So technically on the daily, we're bearish now. So what we're kind of lacking in order for us to get that continuation down is just the acceptance into this valley area and in confluence with this potential double top neckline along that valley area, the macro valley area high. So if we confirm that as resistance, we are very likely coming down here, guys, 93K. We have a huge area of interest here with lots of liquidity resting around this area as well, around 97K. So we have to treat that very seriously because we could bounce off of there, which is roughly the equilibrium point of this valley area as well, not just the point of control. So there's evidence here that we could come back up already and not make our way down. So treat this point of control insanely seriously that we might not get that full rotation down. It could act as a barrier. And listen to the market structure. If we have an opposing change of character in this area, I would be listening to the market structure and taking at least some off the table, depending on where your entry is. Okay. Crazy that Elon and Trump fallout had a bigger impact on the market than the wars did. Yeah. One of the like two of the most richest people in the world are having a spat. It's kind of weird that people are associated to the market, but I get it. I'm sure like stocks like Tesla, for example, would have a bigger impact over than most other assets. But yeah, you're right. We saw like a massive free fall after a weird little fight like that. All right. So yeah, that's what I'm preparing for, guys. I'm waiting on we're getting the positioning to prepare for a long around here. So we just got to wait for that proper structure, get that double bottom, the change of character, preferably on the 15 minutes, but I've got a feeling volume is going to pick up. So you might have to be forced down to like the 5 minute. Let's see what happens. But it's looking like we're starting to get that local double top against the value area high. So we could come down. We can look at like Fibonacci level potentially for seeing if this gets respected as support in the lower time frames, like the 3 minute. So we get like an opposing change of character here off these local lows. Yeah, but I prefer waiting for the bounce for something like this. If we had a bullish change of character and we're going up to pull from the lows to the highs, I'd rather pull from the highs to the lows if we're in a downtrend. Let's see. Anyone still short? Yeah, is anyone jumping on the short? It was a pretty wild move down. It's good for people who are like emotional because if you're like looking at something like the hourly chart, you had no green candles go against you most of the move way down. Like even if you jumped in at this the SFP on like the 5 minute here, you only had this brief period where it kind of pulled back and some people were sleeping during that time and then just free falling 1 2 3 4 5 6 7 8 9 10 11 12 13 consecutive red candles in a row on the hourly. Wild. But yeah, so we know what we're looking for, know what I'm preparing for. So we can look for other assets that might have good correlation to this. So if anyone wants to look at some altcoins, just throw some altcoins in the chat and then we can take a look together and see if there's any confluence back moves that we can get off this. Based on Bitcoin's positioning, I'm preparing for long, so we can see if any assets that are part of like the lower market cap alts that could be preparing for that reversal too. Looking at the others dominance chart, we were a little bit optimistic of a potential strength in the others dominance when we had like the stiletto kind of inverse Adam and Eve structure, where there's V-shaped recovery, rounded bottom. Typically, based on the order flow of this structure, we normally tend to get to the top side of this neckline. But instead, we hit this previous low as resistance, and we got the break of structure for the continuation. I got to redo this chart too if I'm moving over. What I could do is go to this chart, and you guys could do this as well if you like. But basically, if you have a chart and you're trying to rotate your TA to a new chart, you can right click. Sorry, you can control, click, drag all the trend lines as long as you have your anchor in them, your anchor points. And control C. And then go over to the other chart, control V, and it'll paste all your stuff here. Let's get back here. Oh, I just switched to my Bitstamp chart. That's frustrating. A sec here. I got to change the ticker on my watch list to sync to Bybit. There we go. All right, copy. Let's add this to watch list. I gotta do it later. Virtuals. Yeah, we can do virtuals. Dot, SUI, are getting requests thrown at us. Let's see. So we got dot for spot, maybe. Okay, got dot request from Noah. So let's take a look. Oh, I gotta get this added to the watch list. There we go. Click and drag. It's up here. There we go. All right, sorry about that. All right, let's go dot. We have a dot chart, so I'll pull that up. DOT. We have we're looking for a potential reversal around that area. Same here. Going down to 369. Oh yeah, no wonder you want to look at it for a spot. So here we're kind of starting to deviate below this macro value area low that's been part of the price action here for 1,000 days, 1,100 days. We broke downtrending momentum. And typically when we get that breakup momentum throughout its history, we get a full rotation to its value area high. But instead we hit the top of the supply concern at 525 and we got a rejection and we've been in a downtrend ever since. Let's get rid of some of this noise and mark all of our key levels now that we're still in this active downtrend. So here, I'm just pulling the macro value area right now until the point where we lost it, to help us with confidence when knowing of potential barriers if we get a reversal. So we fail to get acceptance to this value area, it could mean pretty rough price action for DOT, maybe even price discovery. If we zoom, like right now we're on the daily, this is basically the origin of its price action right here. And we've been holding the low of it as our value area low from this range for over 1,000 days. So we do not want to see this value area act as a form of resistance, because if we do, we could end up getting like lower lows would bring us into price discovery, and then DOT would be, I think, bleeding pretty hard. So looking at the daily, we just pulled back, hit off this previous low as resistance, in confluence with its value area low. If we zoom in on the hourly, let's see what kind of posture we have. So looking a lot like Bitcoin, just free falling down. We have this value area here, from here to here. Mark that value area low. We want to get acceptance back inside this value area. All right. We are close to, if not already have, sweeping this liquidity here. Let's mark this area here. Yeah, we pretty much did it. We can look at, I would recommend looking at the DOT liquidity heat maps though. So I'm going to do that really quick. What do we have from here to where we currently are is 4 days. So if you're trying to find out the liquidity from a certain key level, like this low, you got to make sure that you are looking at the right time frame. And this has been a low, it was 4 days and 19 hours ago. So we want to likely look at the weekly to wrap around that time inside there. So go to symbol on the CoinGlass futures liquidation heat map. I'll put that in the comments below here for you guys. And on DOT, let's see. DOT, we need the weekly. It's not DOT, dudes. There we go. All right, so we have some like a decent amount of liquidity here. What price is that? 3.6354. Let me just type it as a text. Coordinates. There we go. So most liquidity that's resting from below this wick is right here in the foundations. So we could come down, grab that before coming up. But I'll be looking for, this is a good spot to look for potential local SFPs in general. So yeah, we're in an area of confluence alongside with Bitcoin being at this key area of interest. Like DOT's in an area where we could potentially sweep liquidity and get that reversal. But if we get the reversal with the opposing change of character, then our previous value area low is going to be our primary concern, especially with the confluence of this supply concern right here. So I'd mark this as an area of interest in case it acts as a potential form of resistance. But if we get acceptance in the value area instead with a break of structure for a continuation like this, then we can start targeting the value area high again for that continuation. Mark the template, send it back. There we go. It's just a matter of waiting. So let's get like a pathing tool, something like this. Or maybe even a sweep of the lower liquidity before coming up. It's just a matter of waiting. But we're in that positioning where we've got to prepare for longs. So that's DOT. I hope that helps you out, man. If you have any questions about that, you can reach out to me in Discord. Let's see what else we have. Request on. Short sell zone, not long. We're in a zone where you want to prepare for longs here. But this is an area of interest that if you are going to be jumping in a long down here, this is going to be your first barrier is what I mean. So if you want to be able to hold your trade, then you want to see a break of structure continuation around here to bring us to at least the value area high at 384. But if you instead, because of this area of interest and confluence, we got to watch out for potential changes of character that could tell you to get out of your trade soon, because this could induce a range here. So you just got to watch out here is what I mean. We don't have any structure or posture yet to define when it's safe to enter into a long, but we do have confluences here of liquidity and a deviation of a value area telling us that we can prepare for longs, alongside with Bitcoin's price action here also being close to an area of interest or a potential reversal. So right now, I can't tell you where we can jump in on any longs, but we do know that we're in a zone where you want to prepare for the structure for evidence that this is going to act as support for potential longs, with this being your primary barrier. So that was DOT. We got a request from HRJ for ZEUS. Okay, so I know I haven't charted ZEUS before. So let's take a peek. Perpetual Bybit. So we just hit our head off the 50-day EMA. We are at the bottom of this valley area, slightly deviated below this valley area low. I'll mark it so you can see it. Demand zone mitigation. We'll grab from here to here. So we're in a zone of confluence right now for ZEUS, looking at the hourly time frame. We just grabbed liquidity from below this low. We grabbed liquidity from below this low. We could sweep here. We haven't fully mitigated this demand zone. We tapped into like a 75% of it though, so it's gotten a lot weaker since the last time we came down here. What you don't want to have happen is seeing this neckline act as a form of resistance with a break of structure continuation, because then it would confirm this macro double top, which could induce price action to come back down to these lows. This would be your barrier concern. This would be a barrier concern along the way down. But the momentum-based target for this is... I didn't draw that properly. 1 second. There we go. Yeah, way down here at this low. So the momentum of this posture here is suggesting if the momentum were to be maintained after confirming as resistance, that we're likely going to head here. But with barriers in the mind, that we have a demand zone here and a demand zone right here as well. Send back. So these will be your areas of confluence, for example, that would warn you of potential opposing changes of character, could tell you to take some off the table if we use this as resistance. But I'm in an area right now where because the market is statistically more likely to range than it is to trend, we technically can use just that information alone to tell us that we're more likely going to return back to inside this valley area. With Bitcoin's confluence, I don't know much about ZEUS and what kind of pairing liquidity it has, but let's say, for example, it has a lot of Ethereum pairing liquidity, then you want to watch Ethereum's price action to see if it has a impact over ZEUS's price action. We got decent fair value gaps on the hourly, so some reasoning for basically evidence basically telling us that we might have clear order books, and that the move back up will be fast paced as well. Let's mark we have a little bit of an order block here on the hourly. From here to here. Let me pull up an indicator that actually shows us the order blocks so we can validate it. There we go. I'm showing one down here. Yeah, there's one there. Okay. So I can delete this. Got the indicator already showing it. So if anyone has a hard time finding indicators that show you order blocks, you can see them visually. You don't need an indicator to do it. Basically, if you see whenever you see these kind of tweezer engulfing responses, kind of look to the candle beside the engulfing candle. Okay, and if you see a doji reaction, there's a wick on both sides, right? So conflicting volume, indecision, right? And also got to remember dojis on lower time frames are a half complete confirmation. So if you see that this doji right next to this engulfing candle, use the top side and the bottom side of the wick of these candle, and that is your order block right here. And when we come back down to it, it's telling you, it's warning you that based on the posture of these two candles, that there might be residual buy orders waiting in that area. So if we come back down to it, that's confluence telling you that there might be buyers that could induce a reversal. And the key word is might be buyers. They may not still be there, but based on the posture of the candles, that they could be there. And so if you get an opposing change of character and confluence with that, or maybe you're using Fibonacci, you can use Fibonacci stacking on top of order blocks or valley areas, just another layer of confluence to help prepare you for a reversal. But yeah, I haven't been able to find any good indicators other than one. One from 11x will show it. Most of the indicators out there, they're not great for order blocks. If you find another one out there, let me know. But I like to find one that's free as well for people who are trying to figure this stuff out. But yeah, here I'll be waiting for a lower time frame change of character occurrence. Maybe we'll sweep the lows here first. Yeah, and then get that reversal. A lot of people would prefer that, sweep the lows, then the opposing change of character. And then what you would want to watch out for is the valley area low as potential resistance on ZEUS. And if we get acceptance into the valley area, then we can start targeting the point of control. And where I would anticipate this being an extreme, I could see this giving us a harsh reaction off of this. That consolidative state, impulse move, another impulse move down, alongside with the order blocks, alongside with the point of control. I can see this whole area being an area of interest for potential traders who short off of. And because we had that fast-paced move down, there could be residual sell orders there too. And because we have these two order blocks, we have some evidence that there might actually be residual orders there. And then the order books will validate that if there's limit sell orders still there. But yeah, that's ZEUS, man. That's how I'm perceiving its current condition. I've been preparing for longs, hopefully, but if we instead get that break of structure off of this low, it will validate or confirm a potential massive double top. So if you jump in on the double top, you're going to really hope for a pullback first, so you have some kind of structural guard for a stop loss, because right now we kind of free falled, and your only stop loss guard is this supply concern in confluence with the POC right now. Let's see what happens. But yeah, I'm more bullish than bearish because of Bitcoin's positioning on most assets. Go back to Bitcoin, see how it's progressed. Bit of an ascending double bottom coming up to retest this supply concern here, like the 5-minute supply alongside with the previous value high. I don't think we're going to go very much further up. I think we're going to hit our head and come back down. No problem, man. Late to the party, how the DOT setup looking. We looked at DOT. We're at a area of interest for potential reversal, but we have no confirmation of a reversal yet. Oh, Rundle Rom is saying, huh? Let's see. Okay, so we got a request to look at Ethereum next, and we got one from Rumdle. Ethereum, what do you think of the 4 time frame? The 4 hour, maybe? Is that what you mean? Triple bottom to fly up, head and shoulders to break down. Let's see what happens. Let's take a look. So Ethereum. What is Ethereum doing? Look at that ridiculous candle. You know, the last time we were looking at Ethereum, we were looking at this confluence zone. Right? We saw that we had this impulse move, right? Built a base, another impulse move that became a supply concern. So as soon as we started running out of this valley area here, this was our main area of interest for potential reversals. I saw that we lost momentum. I think this was during the last live. Yeah, like based on the timing, it looks like it was around the last live. We were watching this as a key area of interest for potential shorts, but we ended up getting the higher high, right? So during that time, right here, you would have rotated it to this, generating the new strong low. And then here, we came up, got another higher high, generated another strong low. And Confluence was trying to get acceptance above this valley area high, right? More of a macro valley area high. So lots and lots and lots and lots of Confluence here to jump in on a short. It was screaming short here. And it was screaming short before we even got up there. Like we knew that this was going to be an area of interest. Then after we got that higher high right here, see, we got a lower time frame, like 5-minute structure. If you want to stick to the 15, this was your key area. If you're wanting to use the 5-minute structure, this was your key area for potential shorts. We broke through this area, massive drop. Even if you jumped in on the last key area that we were watching, you only would have a brief pullback with this inverse head and shoulders before coming down to hitting our target. We actually surpassed the target. And now we're at a macro valley low again. So this range, it's not too macro. Like this range has been around for just over a month, I believe. Yeah, 30 days, 38 days. And since we got full acceptance into this valley area, I'm going to pull this valley area here to here and readjust our levels a bit. So we delete all this noise. We don't need it anymore. Now that we're at these lows, let's look left. Let's see what's happened so far. So we did grab this liquidity from this low. We don't technically have to come down to grab this as much as people prefer it, but we already grabbed like a decent amount of liquidity there. Going to the 5-minute posture. It's looking like it's trying to point itself to be bullish. We've got a break of internal local momentum, ascending double bottom, bounce off the 618. Yeah, bounce off that level. We didn't get the lower low. Our change of character response is way up here. If we got, yeah, even because of this wick, this will all be internal. A little bit high risk, unfortunately. But this is an area, like if you are a spot buyer, this is definitely an area that you'd be of interest. But as a futures trader, we got to wait for a more structure to define a safe entry. You could jump in on the ascending double bottom break, but you would have this immediate supply risk in your face that you have to worry about. And you also have to be mindful of the VWAP. The VWAP resets in like 5 hours, which is kind of handy. But sometimes you want that deviation. So price action is going to have to move up there quickly in order for, if you don't want to be nervous about it. And then our next supply concern will be here. Send it back. Template. So yeah, we're definitely in an area where you want to prepare for longs for Ethereum. Tons of confluence here. Sweeping liquidity is kind of nice too, seeing that previous liquidity swept. So just a matter of like, do you trust this posture? I prefer the lower low. In order for so I can get that change of character response, because right now it's way up here, but we're about to get that ascending double bottom break, and a lot of people trade off of that as well. If you use a stop loss guard, unfortunately, because we don't have a strong low, you could use this, but it's not going to be as reliable as an actual strong low. Bitcoin, what are you doing, man? All right, it's double bottoming. It's hit. Let's go to the 5 for a second. Like it's at its supply concern already from here. This zone here in confluence with the value area high. I'm kind of hopeful for a pullback. But yeah, it's in an area where you want to prepare for longs too. Yeah, what I really want to have happen is the more stacked confluences by coming down to this area. But we don't always get what we want. Next request was Solana from Soul Train. Yeah, Soul Train and Andrew. Okay, let's take a look at Solana. Solana, for anyone who wants to be an SFP trader, is a good asset to do SFP trading on. Gives you tons of opportunities. Same kind of posture that we're seeing on Ethereum and with Bitcoin. Got that double bottom posture. It's coming in on a previous value area high and active value area low. We had this little supply concern here that is just almost fully mitigated. We might hit our head off here and pull back. We'll see what supply concern along the lines of that value area. I mean, the VWAP. I'm just going to zoom out time here. Okay, so it's previous demand zone, valley area. We just had this head and shoulders posture, Batman style. All right, got. So when we broke the ascending support level here, confirmed it as resistance here, came down, hit well, not the measurable target of the move, but we definitely hit an area of interest where we prepare for reversals. Ethereum is running up. Bitcoin, a little bit slower. What is that? Money's flowing mostly into USD dominance. Intense. Yeah, hopefully it gives us a pullback. I'll jump in on the continuation. Are we supposed to close at 104.4 or 104.6 to officially count it as a change character? For Bitcoin, what we want to see, a candle to come down below this low here. If we get below this low and then got the higher high, we'd have to change a character here. But instead, we had an ascending double bottom. So now our key area of interest for a change of character occurrence on the 5-minute is technically here. We're just about to get it. We just got it. So we got to change a character now on the 5-minute for Bitcoin. For like something like the 15-minute, it's way up here. Way up here. That's just likely because like our posture was just free fall. We just went straight down. So we didn't have very many pullbacks to define structure to know when we would get a change of character occurrence. So we only got it on the lower time frames. So now that we got the change of character, it should be most changes of characters induce a brief pullback. So if we get that pullback and higher high, I'll jump in the break of structure, then use the lower the low as my stop loss guard. Is there momentum on the 5-minute? Good to know. It's booty, by the way. If we get a change character on dot, are you going to wait for Bitcoin to show a sign of strength as well for entering? I prefer it. So if you're trading altcoins, it's best to see that confluence alongside with Bitcoin. Dots and Bitcoins, dot has a lot of Bitcoin pairing liquidity. So dot does like to follow alongside Bitcoin a lot. And so based on this posture, we can kind of tell like they're almost the exact same, right? All the assets that we're looking at are they're correlating to be about the same kind of potential moves, right? So if here we get a pullback, we're likely going to see it on alts, but percentage-wise, it's going to be a more aggressive pullback on alts most of the time, unless they have relative strength. It's internal though. This is a 5-minute change character. Here we go. All right. Now it gives a pullback. If not, I'm not gonna be able to jump in on this trade. Oh, okay, I see. All right. O'Brien, how you doing, man? Did you change your or you have a separate YouTube, or is it you change your YouTube to your name now? SUI and VIRTUALs. Oh, let's take a look at SUI. I know we were looking at that today during the trade hunting call. We were in the trade hunting call for like, I don't know how many hours, from 9:30 a.m. until 1 p.m. SUI bouncing off the previous point of control like it did last time. Got this awkward break of internal momentum here. Equal lows, basically, relatively close. A higher low here, but double bottom break. Coming up to a supply concern, kind of similar to everything else. You kind of got a deviation away from its supply concern relative to everywhere else, where they're kind of like already at it, right? Breaking through it. SUI still has some distance away from it. So that's telling us that SUI right now, which is kind of unique. We don't really see it very often with SUI, but it has relative weakness right now against other assets. Likely, ever since its hack, actually, it's had some moments of relative weakness where its distance from its key levels have been more bearish. So I'll watch out for this area. Got some opposing confluence that could induce a reversal. We got the VWAP alongside with the supply concern here that could cause an opposing internal change of character that comes down to this previous point of control again. All right, see if Bitcoin breaks this momentum. We're gonna hit our head off of it. What's where are we at? 104.7. Let's go to the order books. And no crazy sell walls. 105.4. Yeah, nothing crazy. Quiet, kind of calm order books. So we have to, if this gets respected, it'll have to be respected by market orders only. So no crazy sell walls. Virtuals. Last time I looked at this was yesterday. What were we looking at yesterday? So yeah, virtuals yesterday was at this value area high. We broke downtrending momentum. I remember being a little bit surprised about that. But yeah, we broke this downtrending momentum. We got the lower time frame, like 3-minute time frame, inverse head and shoulders. You got a change of character here on the 5. We ran up. We were targeting here, but we ended up going above this point of control. Used it as support. Right? Same kind of thing. It fractalized, inverse head and shoulders, lower time frames, came up. You target this high. You have your stop loss guard rotate from here to here. And then eventually, yeah, you would have been either stopped out or you would exit at this double top, descending triangle breakdown. And then we've been in downtrend ever since. Came down, had a really aggressive bounce off of the previous value area low and the 50-day EMA, which we're now below. We were below the 50-day EMA. We had a bear flag continuation and generated a supply concern here. Now we have a lot of stacked confluence for virtuals to not be able to break past this when we come back up. At least not the first time around. So we have a previous value area high, previous value area low, and 50-day EMA and supply concern right here. So if we come up, this would be a good key area of interest to prepare for a rejection. Right now, as it stands, we are currently at this little supply concern. Not nearly as strong as this, not even close, but we do have the VWAP confluence here too. And if Bitcoin's going to drive down from this point of interest, right here, virtuals will likely fall down with it. Where I'm expecting a bounce off this previous high and maintain the potential pace of buyers here along the way. So that's virtuals. Let me zoom out on virtuals a little bit because I want to accumulate more of this stuff. We're here. This is the demands. This is the POC of this demand zone here. We it started off a supply concern, became a point of interest for our range bound price action here. And now we're using its point of control as support. Getting below the 50 days is kind of a big deal though. With all that confluence there, it could force us to get squeezed between the 50-day EMA and the 200. So it's very possible that we could fall down to 138 if we can't get that acceptance here back above 177. So like 177 is a big, huge area where you should set your alerts to this. Because if you're a holder of virtual and you see this act as resistance, like myself, I'm a holder of virtual. I might even consider selling some so I can recycle a rebuy, watching here along the way at 164. If I don't find support there and we get in continuation instead, then I'll prepare for the rebuy around like the 140 level, basically around the 200 EMA. And that could potentially net you an extra 20% of virtual using the same money that you've already invested in virtual. And that's an easy way to like reduce your, well, I wouldn't say easy. Yeah, it does take some skill to like an understanding of all this stuff, but that's a good way to reduce your average by recycling your spot positions. Knowing when to sell and when to rebuy within ranges could allow you to accumulate more of that asset organically. You have 2.1 for business and 1 for getting lost. Oh, yeah. That's funny. All right, SUI. We looked at SUI already. Bitcoin, we're hoping for a pullback. SUI's got some relative weakness. We might reach our way up here before coming down. Virtuals, that's a little scary stuff. Ethereum, we broke past the supply concern. Let's see if we get a pullback on Ethereum. Interesting. Okay. Let's see if we get squeezed between this previous supply that could act as form of support now, alongside that previous value high. Maybe we'll get that really strong continuation here. Getting squeezed between the downtrending momentum and the uptrending newly formed momentum here on the 5-minute. We got an apex here. So we might have a high volume event soon. Hopefully to the upside, of course. Yeah, it looks like it's most likely, because of our positioning, it's going to be to the upside most likely. But all right, BGB. I think is that BitGets token? I don't know if I have a BGB chart. We don't. That's okay. Let's zoom out. Pull it up on. It is BitGets token. All right. So we have a BitGet trader. Whenever you see stuff like this, guys, look at the order books. It could be a good lesson for anyone who is new to order books. Whenever you see horizontal support or horizontal resistance like this, it's almost like evidence without looking at the order books that there is a strong chance of a massive buy wall here, keeping the price from going down. Same here, sell wall. Let's zoom out on this. Let's go to the daily first. And this thing's on. It's been on tear. Macro momentum. This momentum's been holding it up since 10 cents. And now it's at $4.40. So if we're getting a full rotation down here, and then this valley area is kind of like the last thing holding it up. If we get mark our valley area low, this valley area's age, it's about 117 days. Wild. Oops, delete that. I'm gonna go to the lower time frames to like properly draw that momentum line. I'm gonna mark the point of control while it's active, and mark the value high. We're coming down on the daily order block. See here, these two candles define the order block. From this top of this wick, bottom of this wick, define this zone. After you see an engulfing response like that, look for the doji. Top of the wick to the bottom wick, that's your whole zone. Just like this one here, wick to wick, impulse, engulfing response. This was the area here, mitigated it here, became a lot weaker here. And now we're coming back down to this one in confluence with the 200-day EMA being flush along it right here. So like around 435 is an area of interest. So let's zoom in on the lower time frames. Yeah, so I'll be preparing for a potential. It's awkward being near the point of control, but I can see us not making it to the value area low because of this barrier. So I'll be watching out for, if I were trading this, I'll grab the internal momentum here to here to help give us an ETA. When the pace of the shift of the buyers can rotate, it says roughly 2 days. I don't know if it will take that long with Bitcoin's positioning, but yeah, we're in an area of interest where you definitely want to prepare for potential longs. If we end up getting below this EMA, we don't get the reversal confluence, like the change of character response that we normally want, then I'd be watching out for 411 for your next leg down if we instead get resistance off of this. And if we lose this value area, then that'll give time for the 50 and the 200 to cross. And if they cross, then the next place that I'll be watching is the lows of these wicks. And then after that, I'll be watching the uptrending momentum. But yeah, we're in a spot where I would anticipate a potential reversal. At least back up to the value high. And if we don't get to the value high, then this will be your culprit right here. That'll stop you from going up. So that's BGB. I hope that helps you out. Bitcoin, what are you doing, man? We're breaking that momentum. Built another order block. Oh man, it's not gonna give us any pullback. Solomon watching for rejection at 105.5. I see 105.6 here being an area of interest for potential shorts. Five-minute broke through the sell. Yeah, the sell walls were pretty terrible. They're small today. SUI. Okay, we looked at SUI already. Let's look at Ondo. Maybe Ondo's lagging behind. Might get an opportunity there. Last time we looked at Ondo was on the 12th. 74 cents. I'll get rid of some of this noise. So I've been watching Ondo's like previous value area here as a form of confluence for potential support. If we came down, we got an aggressive bounce off this value area low. We came back to this previous point of control consistently, just trying to hold this little demand zone as support. I say little, but it's a pretty big area. Previous POC, bouncing off that, get our downturning momentum. Delete some of this noise. See here, we got a pullback, hit the point of control, then confirmed lower. So we left this little micro valley area. So yeah, we're in an area of interest for a potential reversal. We've came to this point of control multiple times, got a reversal off of it. So we'll see if we get that confluence-based reaction around here. We have a double bottom already. We have the supply concern here alongside the VWAP. So I'm expecting to hit our head off that, hopefully come down, give us better positioning for another long. Okay, we have this downturning macro momentum here that could induce a squeeze. If there's sellers alongside this momentum, just watch out for the order books. See if there's a giant sell wall like trailing the trend line. We have this previous value area here that we can get acceptance into. We have the confluence of that value area having a supply concern. Yeah, right here. But this is our first little boss. I think that we're going to hit our head off this pullback and maybe get a continuation from here. But yeah, hopefully you got in on the double bottom. But yeah, that'll be your first concern if you're in a long. If you're not in a long, then you're going to need to wait for a pullback to define structure for an entry. Maybe we'll fractalize, build another double bottom for a larger double bottom. But yeah, we're definitely in a big area of interest for Ondo as well, man. Harry Potter Masonic 10 Inu is lagging. Obviously that's low cap. there's nothing out there in the world that have a name like that unless it was super low cap. I don't even know if I want to put that in my chart, man. That's kind of, yeah, that's rough. Be careful trading that one. You'll probably have a slippage event that will just have your stop loss dodged. But yeah, I'll mark this little spot here. This being an area of interest for a potential short. Official orders in the back. Yeah, so here, yeah, confluence of the VWAP, confluence of the supply concern. Hit our head off that. And then I'll be waiting for a potential long down here. Bitcoin just not giving up. Oh, man. If it gives us the inverse situation to what we had for this drop, it's so frustrating. Because like to safely trade, there's not very many safe opportunities down in this fall. Like this was the safest, that SFP. The change of character was even kind of iffy because of how engulfed, like how much it, like basically, it's a momentum based candle. It's a massive candle. So like using it as an entry as a breakout trader, we almost suicide in most situations. You need to have a move all the way down to here for a 1 to 2, right? I know it's only a 1% drawback, but like, yeah, the only way you could like, the only measurable target you have was from the triple top, and the triple top measurable target was like roughly around like here. We got a bit of a bounce off of that. So jumping in on the breakout was kind of a little iffy, a little scary, unless you got a pullback off that. Then you can jump in on the pullback. So yeah, the only real safe trade that we had throughout this entire fall was the SFP. Break of structure continuations didn't really give you great posture either for shorts. So yeah, I'd be really annoyed if we just got straight up price action from here instead of giving us a pullback for a break of structure continuation. But yeah, there was someone in the chat that mentioned like 105.5. I was looking at like 105.6 for a potential key area for a reversal. But I was looking at that here too, and we just broke right through it like it wasn't even there. It's what induced the neckline to begin with. It's what induces most necklines for double bottoms is like supply concerns. But that's the only pullback this thing provided us. I had to mitigate that section at some point. Yeah. Brian's looking to short here, he thinks. Yeah, if we get the structure for it, we could get that pullback here. The pace of the buyers have shifted. The buyers are taking over for sure. And sellers momentum for 21 hours straight. So this is the zone right here. $121 watching. What's up, guys? Got 42 people from Twitter, 77 from YouTube. What's up? Heading to VWAP rejections. Where's my VWAP on my chart? Here it is. Let me just fix that. Get rid of my multipliers. So what's a sell wall looking at? looking like we have sell wall not until 105.9. Small sell wall at 105.540. How much is that? 144 Bitcoin ready to be sold at 105.40. 105.540. Let's mark that right here. 105.540. How much Bitcoin was it? 150. Nothing crazy. Tweezer reaction. Watch that. That'll be annoying. If we get a tweezer reaction, I'm going to pull up a Shi-High indicator. See if we get the diamond response. Takes a little while for it to load, though. There we go. Yeah, we got a diamond response right here. Where is the visual order? Bring forward. The Shi-High indicator, for those of you who don't know what this is, what it does is it looks at opposing confluences or pairing confluences alongside the USD dominance. You can change it so it syncs with another chart, but the default is set to USD dominance. So it will look for bearish posture on the USD dominance, which would be bullish in correlation to Bitcoin's price action because they're inversely correlated. So if the USD dominance is starting to go down, for example, during this moment, then you'll start to see this diamond appear, a bearish diamond, or up. Sorry, USD dominance will be going up while Bitcoin's going down. Same with here and here. So it's good for confluences to help you with reactions. But I did back testing on this where I did a 15-minute tweezer reaction. Whenever I saw a 15-minute tweezer, this is a 5-minute, unfortunately, but if you ever got a 15-minute tweezer, like the win rate was just phenomenal if you're just aiming for a 1 to 2. So you use the tweezer high as your stop loss guard and then draw a short position to a 1 to 2. And its win rate was incredible. I don't remember the win rate. Actually, it was around like 70-some%. It was like 15-minute tweezer reactions. And if you had that in confluence of being at a value high or value low, it's incredible. Shi-High cannot find it on TradingView. That's just because it's not free. It's a paid indicator. Darwish, hey Kyle, can you share your Bitcoin chart link? Yep, here's the link right here. Put in the YouTube chat. I feel like it happens a lot recently. Keep waiting for pullbacks that don't come. Yeah, past 24 hours, it definitely has been like that. Okay. Let's see if we get up there. Like when I want to jump on a short, I want to hit our head off the ceiling. I don't want to undercut it and then trade the undercut. I want the confluence, confirmed confluence. But hopefully we come up, hit our head off the VWAP, and then get that change of character. If it wants to drag its feet here a little bit and pull back first, I prefer it. So we have the structure we need for when we get that higher high, we can have a defined location for an opposing change of character. So pullbacks are necessary so we can get the structure we need for our trade setup. Brian saying, oscillators have been staying down along with structure. Need to have the confirmations or you'll continuously get wrecked. Yeah. Yeah. Always wait for the confirmation. Whether that confirmation be a swing failure pattern or change a character or break a structure alongside all your rules. And structure is always going to define your confirmation. You shouldn't be using oscillators for confirmations, that's for sure. Like, don't enter a short just because there's bearish divergence, for example. Whatever your confirmations are, just make sure it's back tested. Yeah. And not just for the evidence of your probability, but also for your ability to enact off your own rules, to identify it with ease. Like, you want to be able to like look at the chart and instantly know, like, what am I going to be preparing for the day? All right. 3 minutes left on the 5-minute candle. And then we'd like to bounce. Get that higher high, hit our head with the VWAP, then get the change of character, enter the short, use our stop loss above that high, target these lows. Previous value high here, point control. And when that change of character is hopefully confirmed, at that point, you can pull a fib from the low to the high and see where we could bounce as well. Especially since we are confirming bullish on this time frame now. You can pull from the low to the high. What are your tactics on taking profit? Gut or clear rules? Never want to do gut, because then you could end up taking profits too soon. So, taking profits is, you got to have exit rules as well, exit criteria. For me, let's say, for example, let's say I jumped in on this long, okay? Whether it be the double bottom break or the change of character, or maybe it was the Fibonacci retest from this low to this high off this golden pocket area here. Whatever your reasoning for entering, right? You want to be aware of your barriers along the way up. And those barriers are going to help you define targets. For us right now, for example, we have this supply concern right here. So this is a barrier, a key level of interest where you're going to prepare for your potential exit plan, right? So jumping into here, you got to be completely aware of what's up, look up to the left, and what are your areas of interest where you might be forced out of your trade, so you can manage your risk relative to that move. Your goal as a trader is to capture a path, right? Your goal is not to try to make $1 million off a single trade. Your goal is just to capture that path. However, you can get that path extended, right? So if we don't get the opposing change of character here, right? And if we instead get like a break of structure continuation off the value area, off the supply concern, or off of this VWAP here, for example, then that tells you that you might be able to hold your trade and look around for your next barrier, your next key area of interest. And when you're setting your alarms, you're setting your alarms off of those areas of interest that could force you out of your trade. And eventually, you could have scenarios where you keep breaking past your key areas of interest for your exit plan, and you'll convert your scalp trade into a swing trade in scenarios like that. But always look for the opposing. I always look for the opposing change of character at these key areas of interest. And if we get that opposing change of character, that's part of my exit plan. If that change of character occurrence didn't happen here, but it happened way, way up here or something like that, I'm probably going to be holding that trade, because like all the barriers along the way that we broke through along the way up, we created new ones for along the way down, right? Little demand zones that could be areas of interest. So you might pick a demand zone where if this is broken, I'm going to close my full trade. Stuff like that, because those demand zones could be key areas of interest to induce a range, and that range could provide you a continuation posture to allow you to hold your trade much more. But don't get married to your trade. You want to, if you see that opposing change of character happen to you like right now, get rid of all that hopium because it's not likely going to occur, and just exit your trade and wait for the next setup. You're like, I know that everyone's like trying to make a fortune becoming a trader. When you're like in a value area like this, say this is the value area low, this is the value area high, and we're ranging between it. Like as we get closer and closer to likely an apex of that range, your ability to be able to convert that trade into a potential swing trade and converting it from a scalp trade gets higher and higher the longer we're in that range and you catch those lows, right? So the moment you get that break of structure continuation out of that value area, that can help you stay in your long that you're in down here for the next value area. So you get that next key area of interest, get support bounce in there. That tells you can extend your trade target to here, right? If you break past that value area, go to the next one. That helps give you a straight, like another extension to your target. Just take things in steps and don't try to target extreme crazy highs. Because that's how you hold your trade too long and then take an unnecessary loss. I hope that helps. I know it's like a long-winded answer, but there are little things you can do to help you stay in your trade longer too, like understanding momentum. Like for example, this momentum right here. Like if you took that 5-minute SFP that you initially started to target just the local lows, and you get that change of character telling you to stay in your trade, watch this barrier, see it breaks the structure continuation instead. Eventually you'll have a momentum guide to tell you that you can stay in your trade until it breaks. So at this point, when you have opposing change of character at key levels of interest and you're in the short, I would be listening to the market right now telling me to take some profits at least. I might not close the full trade because the distance from my entry versus like where we currently are is pretty far. But I definitely would take some off the table in case we get continuations and it starts eating away your profits. I feel like you never get to any of your targets. So your target might be too far. You got to focus on like relative to your range first. If you like see where the ceiling is, right? And right now, like starting on a trade down here, your first initial ceiling is going to be here, right? You might be forced out of your trade early. That's how you generate your targets based on key areas of your barriers, your concerns. Where's your concern? And so long as you have like a 1 to 2 from your entry to your area of concern, you've got a safe trade that you can take. So measure your target based on the immediate threats, and then extend your target based on the next key level, your next threat. Do you have rules? Any rules when you can add to your trade? That's a good question. Like adding to your trades is a little bit tricky because you hurt your average when you do it. Unless you switch to hedge mode on your exchanges. If you switch to hedge mode on your trade on your exchange, which you'll find in your settings, what will happen is it will separate your trades. So if you enter a long here, and let's say you enter a new long here, there'll be 2 separate trades. But if you're on one-way mode, it'll merge the 2 together, right? So if you entered here and you entered here, your new average would be roughly around here. If you did that on like one-way mode, for example. When I add to my positions, it's when I have reasoning to enter a new trade. So if I see, for example, acceptance into a previous value area, see if I can find a good example. Like a really clean, beginner-friendly example. Oh, okay, let's do this for example here. If we entered a short, let's say we entered a short here. We had this low time frame, 3 minutes head and shoulders, right? It's hard for you guys to see. I'll zoom in on it. On a 3 minute, this will be a clear like head and shoulders posture. Let's say you entered a short off of this, off the break, or maybe off the retest of the low, and you entered a short there, and then we had that continuation. If I found a reason to enter another short, let's say we got this consolidative period here, and we got this head and shoulders posture again. Yeah. And you found a reason to enter the short off that, then you can like add to your existing position, knowing that it could go down much further. Like you want to be jumping on adding to your position this when you have a decent amount of distance away from your entry, and you have another reason to enter a new trade. You don't want to add to a losing position unless you planned that it could go against you. For example, if I were to add to a losing position, let's say there was a change of character occurrence here. Let's pretend that there was one, but I anticipate that there might be a pullback. So I only put in a partial position of like 0.5%. And then we pull back to like the golden pocket. Then at that point, I might add to the existing position to get a better average. But you got to plan for it so you keep your risk consistent, because if you add to your positions, you typically want to be in a profit so you can move your stop loss into the profit zone, so you're not risking any more of your funds and you're not hurting your average too much. And when you add to your positions, you try your best to add an equal weighted value to your trade. So if you put in like, let's say $5,000 worth of volume, you put in again like another $5,000 worth of volume. So you can mathematically equate where your average is going to be easily. Andrew's saying these are the times where I'm ready for the pullback and it never happens. Yeah, we're getting the pullback, but we're never getting the higher high now. We have this little micro demand zone on the 3-minute, 5-minute order block. We could bounce off that, get the higher high, hit a heads up VWAP, then get the lower low, take the short, come back down. It'd be a short-term scalp, nothing crazy. No problem, man. If you're in the community, you can always ask me the kind of questions like, if you're in an existing trade, for example, and you're wanting to know like, hey, should I add to this position when this happens? I'll say yay or nay and tell you why. But yeah, typically it's like when all your rules align for another long, you can add to your existing long. Do you think Bitcoin will go further down bottom or will this hold today? I think we're very likely to hold this level, at least for today, to induce a pullback to also induce liquidity. But the daily is technically bearish ever since this moment where we came down here. Luckily, in order for us to go bearish, we have a lot of barriers that we need to break. We have this 50-day EMA, previous macro value area high where this neckline is. But it all starts with losing the 50-day EMA. If we lose that, have active resistance, I could see us falling down to the macro value high at 101. If we lose that, see a break structure of that, then we could fall down to as low as 93K, but I'll be watching 97K area. Okay, so let's see if we get that pullback, because it's like it's never giving it to us anymore. Hey, Cal. What's up, Mark? How you doing, man? 15-minute engulfing. Do you have a 15-minute engulfing response? Not yet. You need to get that lower low for it to engulf. We had that engulfing one here, if that's what you're talking about. Isn't there? Oh, there's CME gaps down at $8,000, man. I don't pay as much attention to CME gaps as a lot of other traders do. It's cool confluence, but it's not rules that I'll listen to tell me to jump into a trade. I think of it almost as it's not the equivalent, but I think of it similar to how I would treat a fair value gap. It's there, but I'm not going to take any actionable decisions because of it. At least not with my trading rules. But yeah, I believe we have a CME gap down there as well, which could be cool confluence as well if we get that confirmation of acceptance into this value area. We could come down all the way down to that macro value of low at 93K. And if we're down at 93K, we most likely will sweep that. How long have I been trading? I've been trading since, I could show you on the daily chart exactly where I started trading. It's like May of 2019. It was, so this was this cycle here. I got to turn my VWAP off for the daily. There we go. Not this cycle. Oh, this chart's too young. It was like May 2019 when I started. I quit my job too soon to be a trader. I'll tell you that. I made every single mistake you could think of. I'm telling you. I got into crypto because of a scam. I started trading as a martingale trader. I did not trade with a stop loss. I quit my job because my martingale strategy provided me a 100% win rate because I never used my stop loss. And then I lost half my funds during the COVID crash. And at that point, I started taking trading a lot more seriously because I had I got a little hobbit. I got a kid. I just quit my job. So the stress was like there. And I didn't exactly have an emergency fund like you should do when you start trading. Always have an emergency fund. But yeah, it was during this, there was this consolidative period in the last cycle. Let me pull up another chart where I started to learn a lot more. When I lost half my account, it was the same time my wife was like trading with me. Like we were trading together, like figuring this stuff out together. And when I lost half my account, she also lost half her account because she was kind of like copying what I was doing. And she grew her account from like $200 to, I think it was like 8,000. And she lost $4,000 and I lost $8,000. So I grew my account to 15K. And she never came back to it. She was like, I'm done. I don't want to do this again. I made this much money. We're good. And I'm like, no, I want to do this for a living. I got to figure this out. Andrew's like, are you telling your story or mine? Yeah. And yeah, then if I pull up this chart here, it's a lot easier for me to kind of like show you what happened. But going back in time to here, this is the big head and shoulders that warned about the COVID crash. This is when I really started feeling like we live in a simulation, because this was like calling for a drop. And then all the COVID news happened after the fact, right? And this is when I lost like half my account. I revenge traded and got my whole account back. So I lost like $8,000. I got the $8,000 back. So I did things the way you were not supposed to, but I got it all back. And during this consolidative period is when I really dived into learning. There wasn't very much volume during this period anyways. So it's right before the huge bull market run. But that's when I learned about momentum. That's when I learned about proper risk management. I was in a trading tournament, in a WSOT tournament. There was about 20,000 traders, and I was in like 3rd place. And there's this one guy, his name was Bitjin. He's a YouTuber. He only speaks Korean. And I hired him to help me figure out like what I was missing, what's the missing piece. And then he taught me about using market structure and breaks of structure to define when to pull a trend line, to know the pace of buyers, to help me hold my trades, and then he helped me figure out how to properly do mismanagement, like where I should be putting my stop losses and where, and how I can use structure to define targets. And those are what I was missing. I had to hire a translator to jump in on that call because I couldn't understand a word he was saying. And the translator trying to translate trading terminology, oh man, it's a frustrating call, but it was worth it. But yeah, after this, I was able to take what I learned from him and take what I learned about on-chain analytics. I don't remember where I learned about on-chain data from, but I was able to generate my own rules to define the best time to buy in a cycle and best time to sell in a cycle using like on-chain data like this. And I was able to then like turn that $15,000 account into 10 Bitcoin. I was doing a lot of inverse perpetual trading, meaning I was like holding Bitcoin to earn more Bitcoin. You guys know it now as coin margin. They kind of rebranded it since this last cycle. So if you see coin margin, whenever I say inverse perpetual, that's what I'm talking about. It's where you can use assets as collateral rather than using like USDT. But I went to doing Uber while doing this because I realized like $15,000 account is great, but I didn't want to pull from it. I never wanted to pull from my account, right? Because every time you pull from your trading account, you're giving yourself a pay decrease as a trader. So to let myself compound, I did Uber while we were going for this rally and converted my Bitcoin from like 1 to 10. And then from here, sold this at this level here. I was given a second chance because all my rules for knowing when the top is going to be in was right here. I was given a second chance, so I closed here and turned that 10 into 20, then put that 20 into an inverse perpetual trade. And now that 20 is now worth 40 Bitcoin. So like there was 3 really big decisions here, and here, like changed my life. But trading in between it all was the only way to make my account size appropriate to be able to bring it to that point. But yeah, the job I was doing before this, I was at a call center, so I had incentive. I hated my job. So I was working at a call center, quit my job, become a trader, realized I quit my job too soon, started doing Uber so I can put that on pause and figure this out at the same time. And I'm really glad that I did. So now I'm able to trade for a living. And there was a question there, like, doesn't it take 6 years to become a profitable trader? When I was trading from here to here, I was really lucky to even get my account to 15 grand. And I started with a $26 account. Super lucky because this behavior in the market allowed me to be a martingale trader for a little while without being punished. And at the time too, we had arbitrage opportunities with Bitcoin. You had gaps that you could take, buy on one exchange, sell on the other for like a 20% gap. Pretty intense. Then Chainlink came along and kind of ruined it for us. but yeah, that was my life. Let's see. But yeah, we have people in the community that essentially became profitable traders after 3 months. We have people that have taken a year in the community to become profitable. But like I have a course, it's called the 30-day trader course, like where the goal is to make you learn everything you kind of need to know in order to become a profitable trader within 30 days. It doesn't mean it's going to take after 30 days, you'll be profitable, but if you ask questions when you're struggling, like ask them from people that you know are doing a good job as a trader, because it's very easy to get bad advice that might sound good in this space, unfortunately, because everything's so convoluted. There's so many different rules. There's so many different ways to trade. It's easy to get caught up from bad advice. So it's best to, whenever you hear something, even from me or anyone else who says that they're a good trader, to back test what they say. And that's how you'll find the good traders. So if they say there's a probability of being right or things going down because of this key level or something like that, back test it. Go back in time, look at the price action, see if there's any confluence is what they're saying, right? Like I talk a lot about value areas, like learn a lot about value areas, and you can find out that like value area high and value area low confluences can help you with your wins, stuff like that. But never trust until you back test. What's the difference between Alex O's and your Discord, Kyle? Alex O Crypto, I helped him a lot with building his Discord. He kind of has like the same model as I do, where he will bring on like really good traders to help give people signals. But I'd say the big key difference is the more hands-on learning approach with InvestiShare and Finova. Because like we do calls where you can jump in on the calls. It's a Zoom call, so you can ask the questions instead of like in a chat. You can talk to any of the professional traders and spam me with questions. Like for example, today we were looking for trades that was preparing for longs, but we never got the confirmation. So we just took the time to answer any questions you might have. So we were like, I was answering questions from like 9:30 a.m. until 1 p.m. today, for example. And you have like a 30-day course. You have a scam avoidance course. You have tools as well. Lots of cool stuff. The $27 to $27 million is great. Yeah, it's at 4.6 million now. It's crazy. That video is good, but it's not very real. The strategy that was taught in that was the Bollinger Band strategy that helps beginners understand mechanical based rules. That strategy is not going to like give you as much opportunities as required to get wealth quickly in this space. But it is a really dependable strategy for like mechanical based rules where you're like, if A, B, and C happen, then you jump into a trade, right? It's not really based as much off of market structure. But if you coupled it with market structure, your win rate with that strategy will be much higher. But the strategy itself has a really high win rate. Aaron V, I had a 4-week win streak in June 2021 from 2,000 to 30,000. Nice, man. Without knowledge, but I wasn't holding for long. Probably 500 trades with 76% weight. You thought you were unbeatable, and then you lost 14K one night shorting because without risk management. Oh yeah. Well, man, 22,000 to 30,000 without proper risk management is pretty intense. But you can see how it happens, right? Like if the market conditions will work really well for martingale traders without stop losses and stuff for a while. And I can tell immediately if someone, based on their dialogue, like how they're talking, where they're at as a trader. If they start saying words that like, my liquidation level is here, instead of talking about their stop loss, I know they're not even trying risk management yet. You know what I mean? Yeah. But that's a lesson people tend to learn the hard way, unfortunately. They get cocky because they're winning really well. So they don't think that risk management's for them. Or I remember when I first started trading, I thought stop losses were a scam, that they were meant to be a tool for the exchanges to take money, right? Not realizing that the exchanges don't really make money off of that. But yeah, I remember like thinking that the stop loss is for the enemy, right? But they are your best friend. They are what allow you to scale in this space. They allow you to put your margin to work properly. Yeah, so it always be using your stop losses, guys. And if you don't know how to trade, you don't rush into it. You don't have to be jumping into trades, right? It's good to like start with a $100 account when you have your rules. And then when you have your rules in place, have a checklist on paper, laminate it if you want to, and then when all your rules are checked off, jump into the trade. But if there's one missing rule, you do not know the statistical outcome of that trade if you jump into that trade without that missing rule. So make sure you backtest your rules so you know the statistical outcome. so you can be consistent with that. So if you have a percentage weight probability, let's say you have a percentage probability of being right 60% of the time by following all your rules, then you have a mathematical edge telling you where you can get after 100, 1,000, 2,000 trades. And 1,000 trades of compounding with a 60% win rate can turn you into a millionaire off a $1,000 like count startup. And I can show you proof of that. Any chances of hitting 100K or below before going up? Well, our market structure has shifted in the 15-minute to be bullish. Our market structure on the 15 has yet to be bullish. So right now, we're building that double top, a bit of a front run to our area. We could definitely go to 101, but I know the answer is kind of annoying. We need to first see the 50-day EMA act as resistance to be able to confirm something like that. If we get that, I don't think 101 is going to be the floor. I think that we could actually go much lower than this if we lose the 50-day EMA. I think we'll get acceptance to this value area shortly afterwards, then confirm a macro double top on the daily, right? As a deviation away from this value area, and then come down to 93K, while being extremely mindful of 97K as a form of support. Like this is like a huge level of support right now. Lots of confluence and liquidity here that could induce a reversal. And that could turn this into a falling wedge posture again for the third time since this cycle. This cycle has had crazy falling wedges. Yeah, understanding trading psychology is a must-have. I see you only trade best the safest way. Yeah, stick to your rules. Now, if you can have rules that act as a layer over top of your existing rules. Like for me, for example, like my primary range-bound rules are like if we're looking at a value area, for example, at a value area low, I'll look for a change of character response, preferably like below the value area where we confirm it, acceptance into the value area after the break of momentum, change of character, preferably with the VWAP on my back or a confirmed break of the VWAP, and then I'll target the value area high. But before I jump into the trade, I'll look both ways before crossing the road, and I'll do that by looking at the order books. And do I see a massive sell wall that could interrupt my ability to hit the target? And if there is one, then I won't take the trade, even if all my rules are met. And it's really frustrating when it happens. But if I see like let's say like 1,000 Bitcoin sell wall here, I'll stay out because it's more likely going to give us a short-term pump and then likely drop back down. And that tiny little rule, looking at the order books before jumping in, has increased my win rate like phenomenally. But the rules of my trading strategy already have like a relatively decent win rate. So my win rate's at like 84% trading within ranges. Trading the contrarian entry, like what we're trying to do right now, is coupled with those rules based on previous value areas. So it's a little bit tougher to have like a higher win rate around here. But if you get these kind of moves, you tend to have really good R&R. So having the lower win rate, trying to get the contrarian entry for the trend-based moves, it give you that R&R that can help you support a lower win rate. Like I know people with like a net R&R, like average R&R of like 1 to 6 or higher because they're like front-running SFPs, but they have low win rates, but their R&R is so high that it can support the low win rate. Stop losses are often used by whales to get you out of your trade. Well, yes or no. So like stop losses are not a tool for whales, but whales will know the order flow. They'll understand. If you're a whale for a reason. You're a smart dude and you've got money. right? So if you understand order flow, whenever there's a break of structure, you can assume liquidity below that break of structure in the form of stop losses, liquidation levels, right? And trigger orders. So around those areas of interest, you can prepare for liquidity to potentially be swept in that area. So you got to make sure you have market structure on your side to reduce that probability of being swept. How much more pain? We're almost at the end of it, man. We got lower time frames is the only thing that we can really bank on for the internal reversal. But we broke down trending momentum. We're at a key. We bounced off a key level. We have buy walls stacking below us. I do think that we are due for like one more pullback before the proper reversal. But even that, I don't think we're going to be going back to these highs again. I think we're going to start generating lower highs. We're starting to get a squeeze against this previous demand zone. So yeah, I think that we're going to get squeezed. We'll see what happens from there. If we don't get the squeeze, then we're going to lose the support. Things are looking more bearish than bullish, unfortunately. But internally right now, as it stands in lower time frames, we're preparing for the internal reversal. And this might be our new high around here if we can confirm that reversal. I'll be watching around here at like 106.8. When you talked about doubling Bitcoin back in the day, you were day trading or mostly holding long trades? So what I did, what my exact actions were, I put $10,000 into Bitcoin and $5,000 into a short-term scalping account so I can make recurring income on my scalping account. And I had a inverse perpetual 10x leverage long after this confirmation right here. We can't see it on this chart because we're missing history, but here was a retest of a macro downtrending resistance level that defined a bull market. This defined a bull market structure based on just a trend line. Okay, it's not crazy definition of a bull market. Don't define a bull market based on a downtrending momentum break like this, for example, like right here. Come on, Kyle, there we go. Okay, sorry, I was just trying to draw a trend line here. So here, like a lot of people would define this as a potential bull market, but we were able to define it as a bull market opportunity down here. And just like if I go to this Bitcoin chart, so we can see the full history, you could look at this as your bull market entry right here. And it was just based on on-chain analytics, right? Right here was the last time we had holders at a loss of over 50% of holders were at a loss here. And relative to their gains, a large amount of them were holding at a loss. Same here in the last most previous break was down here. In confluence with like 3 other set of on-chain rules, I have a whole video on it on YouTube you guys can watch. It's like basically teaches you how to be a macro trader. And you'll be able to call the absolute bottoms and absolute tops like with ease. So when all my rules have been met for the on-chain data in confluence with the break of that downtrending momentum, I jumped in on a 10x leverage inverse perpetual long with 1 Bitcoin, and I was able to turn it into 10. All right. And then I sold it here, sold 10, sold 9, kept 1, sorry. And then rebought with the same amount of funds here for the rebought the Bitcoin. I was able to get 20 in total, and I kept the difference to buy the studio I'm in right now and the house that I have. And now the 40 that I've accumulated from this long from down here, I'm still holding on to that. I wanted to stay in that trade, but it probably worth a lot more in Bitcoin, but the fees were just so high. I was using my scalping account just to cover the fees of my long-term holding position because it was costing like $250 a day just to hold that trade because of the funding rate fees, because of the amount of interest that came to the market after the ETFs were launched. And I'm kind of lucky that I did close that trade, because if I were to try to hold it throughout this range, that'd be like 200 and some days worth of fees where I wasn't really gaining much traction on my position. All right. So I got no regrets on that one. But I know mathematically it could be worth more if I just stuck through it. But it sucked giving away my scalping position profits just to hold that trade. Going back to this chart. But yeah, after figuring all this stuff out, that's when I created InvestiShare, it was because I wanted to have a group of people to learn with. Right? I wasn't charging for InvestiShare at the time. It wasn't until the community told me that I should start charging that I started charging. And then I've been able to use the money to like build really cool tools for the community, like hire a team of people that help me out. It's been awesome. And you're saying I made really great decisions, but I made all the worst decisions first. If I could make a video on just like all the mistakes traders should avoid, I know you see them all the time, but I'd probably have like the list of ones that I've done just based on like real life experience, and it just like exceed any list you could think of. It's nuts. I want to pick Ondo on a 2x until alt season. Should I enter right now or wait? You should be doing that with a spot account, not with futures, if you're going to be holding it that long. Trying to front run the season through a rally, you got to make sure you're confirming a position of strength. Based on Ondo's positioning right now, we're off a previous point of control from this consolidative range right here. We're balancing off that right now. If we fail to get acceptance back above this value area high for Ondo and get below this point of control, we could rotate down past this liquidity area and back all the way down to 65 cents where the value area low is. So there is no position of strength right now for Ondo for me to say reliably that yes, it's a good idea to jump in on 2x long, because 2x, your liquidation point, because you're speaking your terms as if you're going to be focusing on your liquidation and not having a stop loss. So you would lose all of your funds if Ondo went down to a division of 2 of this price. So 0.74 at 37 cents. That's a pretty good low, so I can see the interest in it, but never assume levels cannot be taken. My wife just came in for a second. But yeah, right now as it stands, we have a double bottom. Like, so internally right now, we got some potential strength coming in. We're coming into an area of concern right here. So we could get that continuation up, but there's a lot of pairing liquidity with Bitcoin. So if we see that relative weakness with Ondo because of its positioning is a lot further away from a supply concern, then it's because Bitcoin's rejection of this double top like prevented that continuation to that supply concern. And why can you 1x leverage long when you can buy the coin? Well, 1x leverage, the purpose of it, I understand your idea. The purpose of it is to allow you the option to withdraw margin to increase your leverage in the trade after it becomes a winning trade. Or at least that's the purpose that I would give it. So if you were like in a 1x long here, for example, and then we got the break of structure, got past the VWAP, and there's good continuation, but you wanted to dedicate your funds to a different trade, you can then reduce your margin and increase your leverage on that active trade to then dedicate those funds to a different trade while leaving that one active. Yeah, one reason for it. You seemed like you're working really hard too. Thank you. Yeah, I'm literally working on stuff 24/7, like what you said. So from what I stand as the big gains come from holding, scalping help with the kitchen money. So it depends on how you manage your funds, but how I normally recommend it is if you have a account, let's say you have a $1,000 account that's meant for scalping, you can then compound, let's say 70% of your gains into the account to make it grow. So every single time you close your trade, you're giving yourself a raise, right? Because if you're risking to lose 1%, the value of that 1% will keep growing, right? While using the other 30% of the account can go towards like a longer term bag, either for spot buys or long term swing counts and stuff like that. But yeah, scalping helps you cover your bills, and your long term holdings help you generate wealth. And not saying that you cannot generate wealth with a scalping account, because you'd be surprised. Like we've had a member once just copying my signals. He turned a $250 account into $1.2 million just copying my trades. And he did it in like a stupid amount of time, like meaning like he did it too quickly. So like his risk management wasn't all there. But he grew his account like massively and was able to do, I think it was like 6 months or 8 months, just like compounding with scalp trades. But yeah, he was using too much margin when he was stacking it, though. I'll tell you that. The downside, like having like a decent win rate, some people will jump in and like ape into my trades with too much margin, not managing the risk properly, not trying to do it like, and what will end up happening is I'll have one losing trade, and because they risk to lose too much, they'll eat like half their account. When really what you should be doing is, I recommend milestone risk management if you're trying to like, especially if you're a beginner, where you're risking to lose like $10 here, for example, until you grow your account to your next milestone, which could be like a $1,500 account. And then at that point, you evolve your risk to like $15. And with the $15, you'll be risking that to try to gain like 30, for example, or more, preferably more, but you want to at least try to get 2x your risk. Just like with this, it'll be like 20 bucks. And that sounds slow and that sounds boring, but you'll be insanely surprised how much like it starts to ramp up, especially when you get to like $10,000, how much it starts to scale and compound and grow from there. Once you get to $10,000, you feel like you could live off of it, but there's a mathematical equation that I kind of like teach people, like when it's appropriate to actually quit your job to be a trader. Like you want to first have like 6 months worth of expenses, which normally most financial advisors would say 3 months. But as a trader, I'd recommend 6 months, because like it's also about emotions too. Like if you had something like 6 months to fall back on, you're gonna feel a lot less risk, a lot less stress when you're trying to depend on your trading. And less stress means less emotional decisions as a trader. The less decisions you make based off emotion as a trader, the better off you are. What I'm trying to understand is, what is my realistic goal with a $10,000 account doing scalping? I wish that was an easy answer, man, but I can give you my answer. So the answer to that is relative to your trading strategy. So if you know your win rate, I can give you a really good understanding of how much money you're going to make with that. It's like a $10,000 account. You want to risk to lose $100 to gain 200 or more, right? Preferably more, of course. But 200 is the minimum, right? You shouldn't take the trade unless it's going to give you 200 or more. So that way you're consistent. So your wins can outweigh your losses. If you have, what do you mean by realistic goal? So it depends on what your goals are. If you want to be doing this for a living, you want to make sure that your percentage win rate, let's say it's like 60%, right? Is with this account, you'll know what you'll be at like 100 trades from now with a 60% win rate, right? And let's say from 100 trades from now, you want to grow this to like if you want to grow this from like to a $15,000 account, you'll know how many trades it takes based on your win rate. There's this not the indicator. There's this calculator that I'll recommend. If you go to any of my servers, sec here, you can be in the welcome chat, for example. Oh, there's a scammer here. Let me just boot him out. And you type toolbox, exclamation point toolbox. You'll get a DM from our system. And that DM will give you a list of tools that are free to use. And this one at the very top will help you understand where you'll be at like 50, 100, 200, 1,000 trades from now using a simulator. So if you're starting equity, it's like $10,000. And let's say your win rate probability is like 65%. Your average net to R&R, let's say it's 1 to 2, like the bare minimum. This is backwards, it frustrates me. How many trades you do, let's say 100. Number of lines means number of probabilities. Say, let's do 100 trades, 50 probabilities, risking to 1%. Okay. And then from here, it'll tell you what you'll be at with like $1,000. Oh, it's autofilling stuff. Sorry. Let's put in 10,000. So at 10,000, after 100 trades with a 60% win rate, if you compounded all your gains, you'd be at $55,000 after 100 trades. Assuming your net average R&R for each of one of your trades is a 1 to 3. Like 1 to 2, let's go back down. It goes to like 31,000 after 100 trades, which is still pretty damn good. So if you have a $10,000 account, you can make 31,000 after 100 trades. So then you find out how many trade opportunities does your strategy give you. Does it give you 5 trades per day, or does it give you 5 trades per week? And then you find out then you'll be able to know like exactly how many trades you get in a year, and then you can type in that amount here. So if you find out that you can get like, let's say you get 5 trades per week, times that by 52, assuming you're going to trade it every day, like every week, get 260 opportunities. And then from there, you can know exactly like where you'd be at the end of the year with a $10,000 account. It's like $128,000 with a 60% win rate. But this thing will also tell you like your max drawdown, risk, stuff like that, like how many consecutive losses you could have based on your win rate, all that stuff. And most strategies, even if you have an 80% win rate, will give you a 9 consecutive loss streak at one point or another. I know that was a lot, but that's kind of like the answer I could give you, man. So you can use that kind of framework to help you identify like what kind of goals you can give yourself based on your win rate. If you don't know your win rate, then you shouldn't be asking that question yet. Like you gotta like first back test, find out what your win rate is in the back testing environment, then practice it in a live environment with a small amount of funds, and then scale your way up to a real account size. Have you explored Skinner Trading Stream before? I have never heard of that. I kind of stopped following a lot of YouTubers ever since I became profitable as a trader. I'll follow like my friends like Alex O'Crypto, but only because I've seen like his stuff in the background. Like him and I work together a lot, So like I know his win rate is true. I know that like what he does is true. But I don't really look at other people's stuff because it messes with my perception of the market. They might, yeah. I'd rather just listen to my own TA. What strategy would usually suggest for those I do have experience? For scalp trading? Like I got my, what strategy would you recommend? So like it depends on what you want in your life and what kind of lifestyle you want as a trader. Are you wanting to be like a digital nomad, like our friend David, who's one of our coaches, who only trades swing trades, so he doesn't have to monitor the market as much. He only looks at the market when the alarms tell him to. Or do you want to do this daily? Do you want to be looking at the charts like 5 days a week between your trading window? Then during that, I would recommend like a scalping strategies like Fibonacci-based entries, value area trading, range bound trading. The market trades sideways 80% of the time. So if you want to have more opportunities, then I'd recommend a range bound strategy. If you want less opportunities but bigger moves, focus on a trend bound strategy, but you'll only have 20% of the opportunities compared to everyone else. You can always have like an account dedicated to each scenario. Like I got 2 accounts for trading. I got like $100,000 account and I got a $10,000 account. The $10,000 account, I will flush it out at the end of each month based on its surplus. So if we get past $10,000, I will take out the surplus and start over each month. And I got a $100,000 account meant for like swing trades where I risk to lose 1,000 to gain 2,000 or more. Stuff like that. 5 to 6 hours a day. Okay. Range bound strategy for sure. I got a clairvoyant strategy in the course. That's called clairvoyant. That one I recommend for sure. Like using value areas. Like value areas, break a momentum, change the character, target the opposite side of the value area. It's pretty simple. Or like using Fibonacci, trading along the trend, stuff like that. Do you think Bitcoin has reached its local type? Maybe, local top, maybe for the summer or a cycle top. We haven't confirmed that, but I think we're pretty close to confirming that. So if I would say yes to that answer, if we got acceptance into this value area here, and because we could fall down to 93K and then volume could start to dwindle around there. By the way, I noticed you're promoting 2 brands such as Finova and InvestiShare. To answer that, Finova has contracted InvestiShare to provide them the same service that we provide people inside InvestiShare. That is why. So it's completely up to you which one you'd want to join. But yeah, that's basically what's going on. Cool, you're taking the course. Oh, cool, right on. Okay. So yeah, around like when you get to around day 20 in the course, you'll start to learn like there's like 5 different strategies you can learn. So I'd recommend like if you want to do this like 5 days a week, 5 hours a day, the clairvoyant strategy is great. What's good about the clairvoyant strategy is you'll be able to mark key levels and you can just spend your time on yourself and your family while you wait for those alarms to go off. And you're kind of set for your day. Like even though you might be dedicating that 5 to 6 hours for trading, doesn't mean you have to be at your desk for 5 to 6 hours. And I just uploaded a new like Fibonacci strategy that will help too, that you could use for like a trend bound moves like this. And for anyone who's like interested in learning, like we have a promo code going on right now, like learn to earn. So you can get like 75% off the first month to give it a shot to see if it's for you. And What I tried doing with the course is I spoke to the camera as if I'm like talking to my mom, and she's like a super boomer when it comes to stuff like this. And the intent is to see if I can get my mom to understand the course, then I can get like nothing against my mom, of course, but I can get anyone to understand it, right? So it's kind of like what I go with when the feel I go with when I was trying to teach. Just try to explain in a way that I'm trying my best not to assume knowledge, because that's a big problem with a lot of courses. When I first started trading, I took some courses, um, and they assume knowledge a lot of the time, where they think that you always should know what this means by the time you get to this first lesson or something like that. A lot of the courses I took were a big waste of money. All right, guys, I should probably be heading out soon. Do you have any questions or any quick assets you guys want to look at before I go? We broke the support now. Do you think that we can go back up again? What support? Are you talking about the neckline? And we've got this internal break here. So this is an area where we can potentially prepare for a pullback from this low, from the impulse move to the high, with the confluence of the previous boundary high here. So if we get a change of character occurrence here, you then target this local high. And that's where I think that we're going to hit our head really hard off of that VWAP and during that moment. So let's look for, see if we can get that posting change of character here. Maybe we'll drag our feet to hit this uptrending momentum before we go up. We don't have to hit the momentum. It's young. It's only 2 touch points. But these momentum lines induce buy walls in the order books, and that will help you identify if there's sellers or buyers there, right? And I don't see any real evidence of buyers except for at 104,090. There's a buy wall there for the amount of 140 Bitcoin. 104.90. So yeah, there it looks like there is a buy wall right along the trend line. So this validates the trend line that there's at least 190 Bitcoin or 150 Bitcoin ready to be bought right here. So we have people respecting this trend line right now. I love the order books for that, because it gives you like evidence of that. And if you don't see any like real evidence of confidence in the order books, it just means there's no walls. So if you don't see any walls, then you shouldn't trust the trend lines in that area. Same reason why we had a hard time trusting this trend line when we came back up to it, because there's no sell walls, right? There wasn't a sell wall until up here. Then we had a tweezer reaction from market orders. You were talking about a $250 fee holding a trade. Could you explain what costs made that up? Yeah, sure. That's a good question. So when you're in a trade, your exchange has what's called funding rate fees. And by the way, funding rate fees could also be an indicator to help you with your trades too. And I'll explain that in a moment. But right here at the top of your exchange, you'll see funding rate fee, and there's a countdown. Most exchanges will charge you every 12 hours. Sometimes it's every 8 hours. Sometimes it's every 24 hours. But usually it's like an 8-hour cycle. And the countdown's here, and you'll be charged based on your volume. So if the funding rate fees are positive, you're going to be charged on your long positions. But if you are in a short position, you'll get paid for being in that trade based on the amount of volume you put in. So that's where the fees were coming in. The funding rate fees were extremely positive. There's a lot of interest on Bitcoin. So I closed my trade because the fees were, it was costing me like $250 based on my volume. The funding rate fees were really high. Now, this is where it gets really, we see the funding rate fees have just gone up a little bit. This is what I'm preparing for in the bear market, when the bear market occurs. Even in the bear market, the funding rate fees are usually positive most of the time. It's actually fairly rare for them to be negative, because even a bear market, a lot of people are bullish and constantly trying to jump into longs. Most people are one-dimensional traders. They'll focus mostly on longs rather than shorts. So when you see the funding rate fees being positive, if you're in a short position, my goal for this cycle is when I call the top using macro on-chain analytics and confluence with the daily change of character, I want to jump in on a short so that I get paid funding rate fees from all the people jumping in on their longs, and I can earn passive income during the entire bear market holding that trade. And if I give it enough volume, then I could essentially cover my bills. It's just like holding a trading position while making money while it's going down. And so when I jumped in on my long, I put in a lot of volume. And if I go to like the daily, it was when we got to the golden pocket and the ETFs came out right here, that the fees were ramping up from like, I was paying roughly around $80 a day before this. But after this, it was costing me like 250 on average per day. And I was like, I don't want to trade for free anymore. So I got out. But yeah. So my goal this cycle is to help coach the community into a large macro short, which I'm assuming is going to be based on the on-chain analytics. It's going to be between 150K to 200K. When Bitcoin reaches around there is when we'll be in the overheated zone. This thing calls the top perfectly every cycle. When we get around there, that's when I'm preparing for that macro short, hold that position, and just, yeah, be good. Easy passive income until the opposing rules are met, and then we'll get out. Okay. So we got a 5-minute pullback. Nice. Let's get that lower low. We're coming to that confluence zone. Let's get that internal change of character. Let's look at the 3-minute for that. Then we can target these local highs. Would you signal that macro short? Oh yeah. It would be the good thing about that signal. When I do my daily like massive trades, I scream them through the rooftops. It's not just inside the community that I'll post the macro signal. I will post it on Twitter. I'll post it everywhere. And I remember posting about like the all-time high and saying that I will not be remembered for this. like I sold my Bitcoin at right here, calling this as the bear market top. And I posted about it on Twitter saying, like, yeah, I will not be remembered for this, but this is when I called the all-time high. And it was I didn't short that though. I just closed my macro long position. I sold my Bitcoin. And then shortly afterwards around here, I sold all of my Ethereum and all of my altcoins as well. Because then we had a brief period with the altcoin season, and then it kind of ended after that. Because this was the period, when you call the top, this is the period when the funds were shifting out of Bitcoin and into alts. So we had this brief short-term altcoin season. And then, yeah, once the altcoin season tops are in, well, the thing I did wrong this cycle, this last cycle here, is I invested in too many assets. I probably, I was on KuCoin. I was trying to buy like even just like $10 or $100 of every asset on KuCoin. It's just like one of these are going to make me a millionaire. That was my mindset. Like half of them are dead, but so I basically came up break even. This time around, I've learned from my mistakes where I've got a hyper niched focused portfolio where I'm focusing mostly on real world assets. My second biggest bag is Chainlink. If we all bought that as a community at like $7 when we called its bull market rally to start, and I still think that Chainlink can go much higher. I sold my seed investment at $30. My goal is to sell the rest of it when the top is called. Mainly for Bitcoin. When Bitcoin's top is called, I'm going to be selling my Chainlink very shortly after. how long will the window be to get in on the position of strength to fit the macro short? So that's a good question too. So here we normally have, let me just look at these tops here, because I don't technically know the full answer to that. It's probably like 2 weeks. So we got to this high, this high, this high. I'm sorry, just find that answer for you so I can give it to you. So here we were given, this is when all the rules were met right here. And we were given during this time, like close to 80 days. We had this double top second chance because I was emotional. I didn't listen to my own rules here. And I got a second chance. I'd like to thank Michael Saylor for that because I feel like he's the one that got most of the attention into the market around that time. But yeah, here was the second chance opportunity that I took. It was like 30-day warning. The last top, oh, I can't even get to that. But I'm going to assume it's probably around 2 weeks to a month of warning where you have that positioning, right? Where you come up and you see all the rules met here, telling you to prepare to get exit. And then what you want to look around for is that daily change of character. And we got that here. And once we got that daily change of character, that confirms the top. Like there are other rules other than just the 2 that I showed you, but all the other rules are already almost met. Like for example, the supply and profit. That's one of my rules for calling the top. I want to see the profit be above 90%. And right now we're at that point. We dip in out of it quite a bit lately, but that rule is technically met. We definitely don't want to listen to just that rule alone. And then the NUPL chart, the net unrealized profits and losses chart, based on long-term holders and the full NUPL, which is like all holders. You want to see this, like the long-term holders get to around like the 80, 70% level. And here as well, you want to get this to around like the 70% level. And then you start to prepare to call the top there. And then this chart was the other one, not this one, sorry. This one here, being overheated. And calling the bottoms is actually, in my opinion, easier. It's easier to call the bottoms than the tops, but the tops are, honestly, it's not that much different. It's harder to give up your assets than it is to buy it, basically. Emotionally, getting into the bottom is easier. Emotionally, getting out of the top is harder because you have to sell your assets. And I know it felt like giving up a child when I was selling my Bitcoin because I was afraid of potential loss of opportunity. But you got to listen to all the warning signs. Forget the emotions. Focus on what the charts are trying to warn you, or else you'll kick your own butt. Yeah. I will never get over missing link at $7. I hear you, man. There's more opportunities though. We aren't even close to an altcoin season. Not even close. So like you have opportunities right now as you speak to try to find assets that fit the narrative right now, which is like real world assets. Like Chainlink is a good one, but Ondo is also a great one, man. And Ondo is at a really good price right now. And the AI tokens, like look at Virtual, look at FET, AR. Link is not the only moneymaker out there. And you don't have to dive into like the meme coins to get rich. That's how you get destroyed. Near, yeah, HRJ is talking about Near. Near integrated AI into theirs like fairly recently after the AI boom, or it was correlated with it. And Near, one thing I'd recommend with Near is paying attention to NVIDIA. If you're a trader of that, if you watch NVIDIA's like earnings reports in correlation to like any like bullish structure, you typically get a really good short-term burst trade. Yeah, Link is only $13 right now. Link also inflates too. It inflates by 7% per year. So the inflationary damage has brought its market weakness point lower. I think it's like at $32. I think it's higher than that actually. I'll pull up Link and find out. I did the math recently on it, so you only have to update the math on it maybe like once every 6 months. Where are we? I trade Chainlink a lot, so there's a lot of noise. I'm sorry. All right, $35.96 is the market cap all-time high. Because of its inflation, and you should know this with tokenomics because it's not stuff you have to worry about with stocks, right? So with crypto, you have to worry about tokenomics. Is the asset constantly creating more tokens? And if it is creating more tokens, then it takes more money to bring it to its all-time high, right? Because the market cap, well, the price of an asset is defined based on the market cap divided amongst the supply, right? So if you find out what the supply is right now, find out what the previous all-time high market cap was, then divide that all-time high market cap into the current supply, and you'll find out the new market cap all-time high price. And there are traders that will respond to this level and sell pretty much everything once it gets to a new market cap all-time high. So just keep an eye on that along the way, because you got to treat this like it's the all-time high. And there are some assets that are way, way worse than this. Like this is okay. Like from $53 to $35 is all right. But there's some assets like Uniswap and Cake and stuff like that. Those DEX tokens that are constantly providing rewards. They're the ones that have like those infinite supply creation that you really got to watch, because tokenomics like that can tell you that the asset may never reach its all-time high ever again. I'm not saying that's going to happen for Chainlink. I think Chainlink is going to create a new all-time high despite its inflation, because it's going to have a lot more interest, especially with the adoption that's coming in from the banks. Yeah, I feel like Chainlink is going to do extremely well this cycle. So relative to like Chainlink's current price, like we could still like 3x from here. Akash is interesting. Yeah, Akash is pretty cool. Last question from Safer. With your rules, how much in terms of percentage are you making per month on average? Depends on the market conditions, man. I've had really, really good months. Like May was amazing for me. I think May was, if you're not compounding, I have about 40% growth on my account. But my average growth is about 15 to 20% of my account if I'm not compounding like that, if I'm just like constantly withdrawing. So you don't believe Investing Bros prediction of 200 plus? Are you talking about Chainlink? $200? Come on, guys. Well, that's good clickbait. So let me a second here. There's this free tool you guys can use called marketcapof.com. If I can get my computer to render it, there we go, market cap of. And this helps you keep yourself grounded a little bit. So, for example, I love hearing the targets of XRP getting to $10,000. It makes me laugh every time I hear it. So let's get Link here. What's going on? There we go. Chainlink. And let's throw in Bitcoin. So if you gave Chainlink's Bitcoin's market cap, it would be worth 3,160. Okay, 200 plus. Not too shabby. Give it Ethereum's same market cap as Ethereum, be 462. So you basically need Ethereum's current, like half of Ethereum's current market cap to bring it to like around $200. I could see it being possible for a chain link getting to $200, but I do not see it happening this cycle. And with this tokenomics, I can see it getting harder and harder and harder for it to get to $200 too. It's fairly inflationary. And there's these XRP. I'm curious about XRP against. We can just look at that later. But yeah. If I were to give you like a optimistic target for Link, it'd be $70. That's super optimistic. Almost all the world's money would need to flow into XRP to get it to 10K. Yeah, exactly. Yeah, that's why I like hearing about like the Shiba Inu and the Pepe targets reaching $1. It's just so ridiculous. Like you need basically BlackRock to give its life savings to it in order to get close to $1. That's nuts. What do you think about Engine? They would provide decentralized cloud service. So there's a lot of competition against Engine. I don't hold it. I'm not saying there's anything wrong with it. I just don't know enough about it to give you any proper advice on that. Having a decentralized cloud service is pretty cool, but I could see that being created by other competitors. I could see a day where like Amazon, for example, that they might have their own cryptocurrency. Like Sony's creating their own called Sonium. That one's gonna be intense. And when Sonium comes into the market, I can see that giving the gaming sector a massive amount of attention. And then cloud services will be a lot more required for all the developers that are trying to build on chain, because their databases for like on chain games are terrible. There's some of them that are finally figuring it out. We're starting to get games with actual graphics and stuff. Carl to the Moon said he would delete his Twitter account if Ethereum wouldn't reach 10K this cycle. Side note, that was 5 years ago. Well, Carl, I used to follow Carl to the Moon when I first started. Yeah, not good. Yeah, that kind of Carl to the Moon, Crypto Zombie. Crypto Zombie's all right for news and stuff. But Crypto and like Carl to the Moon, I found them kind of dangerous. All right, guys, I gotta go. I had a lot of fun just hanging out, talking. I know there wasn't any trade setups, but to give you guys a quick overcap, so we're in a huge area of confluence to prepare for longs, right? We have this liquidity here that could be swept. We have this previous value area low. We have this 50-day EMA. We're starting to stack buy walls. We saw evidence of a 170 Bitcoin buy wall here. Not that big, not that huge impacting. That's only high impacting during low volume. And we're starting to see buy walls as well, riding alongside this momentum. So we might get a bounce off this momentum, get a change of character, and then you target these highs right here. And then from here, I believe we'll go range bound after we hit our head off that. And then we can define potential structure for a reversal. If we instead build a larger ascending double bottom, not only would we fractalize, because we have one right here, prepare for the continuation if we get the break of structure on top of the VWAP, which may reset before we come up there. This resets in about 3 hours, which would help bring the price action, the probability of the price action to go up a lot higher, believe it or not. And then from here, look for your supply concerns along the way up. We had a really awkward crawl down on the hourly, right? So here's our next area of concern for any longs that you might go into down here. right? If you get any longs, then this is your area of concern where you prepare for the opposing change of character to get out, basically. That's around 106.7 up to 107.6, where you kind of wait for that opposing change of character. But yeah, right now we're in an area preparing for longs. If we don't get like that proper entry for a long condition down here, where we're waiting for that low time frame, like 3 minutes will be enough. 3 minute opposing change of character here to then start targeting this high. If we instead get the continuation, just then be mindful of, like I said before over here, that liquidity that can be taken for a reversal as well. It doesn't mean we're going to zero. It means that we could sweep liquidity first before reversing, which I kind of prefer, right? We want that liquidity swept before going up. So there's less reasoning to come back down. But if we instead don't get that sweep and we hit our head off this 50-day EMA, you get that break of structure, we'll fall down to 101.3. And if we lose 101.3, then 97K is the next area. It's like macro-wise, we are in a really bearish position, the macro-wise. Like we have that daily bearish change of character occurrence here on top of a previous value area high. So if we break this neckline in confluence with that 101 level, we'd have acceptance into this value area that could bring us down to 93K. But we have to be very, 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 very mindful of 96.8 or 97K area. It's a demand zone. It's also a previous point of control. I know that's a lot to kind of take in, but you can keep looking back at what I just said and repeat it over and over again, just to like help you get yourself an edge in the market if you want to use this with confidence with your own trades. And if you guys are a part of the community, I'll give you guys a signal if I find something safe to jump in on. It would likely happen very soon alongside this momentum if we get that opposing change of character for like a 3-minute scalp to this high. And hopefully we get the continuation to stay in our long. But if we don't, we'll listen to the warning signs and we'll get out. All right, guys. Mark's saying he's been listening to traders, watching Traders Reality during FOMC. Always fun. Yeah, I hear you. Yeah. All right, guys. You call tomorrow morning? Yeah, we got a call tomorrow morning at 9:30 a.m. I'll do the YouTube live tomorrow at 9:30 at 8 a.m. until that call starts. I'm going to be giving you guys like a schedule. I'll post it on YouTube and I'll post it inside the community, a schedule that I'll follow for like YouTube live. So if you guys want to follow along, like you can reach out for that soon. I'll give you that schedule tomorrow. But yeah, I'll be live tomorrow morning on YouTube at 8 a.m. We'll get ready for the pre-market, hopefully find some trade setups, and yeah, go from there. All right, guys, have a great day. Thanks for watching. Subscribe if you want to continuously learn from me. I appreciate everyone who's been watching. We got like 150 concurrent views together. That's pretty cool. But yeah, I'll see you guys in the next one.